Hello friends, this is Leo and welcome to the Pivot Boss Mastery course. And in this module 4, we're going to look at the price action around pivots. So what does it mean? So we got to look at the candlesticks basics near the pivots, how it appears and what does it tell us. Okay? Understanding the price action near pivot levels begin with candlestick basics. Each candle tells a story, especially when it forms at the critical level like CPR, VWAP, or at the Camarilla Pivot. A strong bullish candle breaking through a resistance level means momentum is real. But at the same time, a long wick candle or an indecision candle suggests hesitation. Okay? So we have to keep in mind that we have to read the candle related to the location. Okay. Now let's talk about some trap zones around CPR and VWAP. One of the common mistakes traders make is chasing the breakouts, only to get trapped. And we have seen this many times. Okay? Trap zones often occur just above or below the CPR and VP. So price may fake out in one direction and reverse sharply. So we got to learn to recognize those zones, and that often form during the first 30 minutes of the trade. And this will help you to avoid these traps and also save your capital. Breakout versus rejection at pivot levels. So the key skill is to identify whether the price will break through the pivot level or reject from. Look for the strong momentum candles on high volume for a true breakout. Remember, we talked about the volume moves the price. So we got to look at those kind of volumes at this true breakout levels. Okay? If a price tests the level and close with the rejection wicks, especially multiple times, that level is likely to hold. Okay, and we have seen this in our trading room many times. So technically, breakouts require strength. Rejection, it signals a defense. Okay, so what are the different types of bars that we can see around the pivots? One is the inside bar, and the other one is the pin bars, and the last one is the engulfing patterns. Okay, there are many candlestick patterns, but we will just focus on these three, which is more than enough to take good trades. Okay, so certain candlestick patterns becomes more powerful when they appear at pivot zones. That's what we have to pay attention to. So if you look at the inside bar, it indicates consolidation. Just wait for a breakout. Okay, pin bar with the long wicks at the pivot can signal rejection. We're going to see that in some of the examples. Likewise, bullish or bearish engulfing candles show sudden weakness or strength. So always remember, these are all just candlestick patterns. We are not going to trade this just blindly, and we are going to look at in the context from the pivot standpoint. Okay, Camarilla H3 and L3 levels are key reversal zones. When price hits H3 and forms a bearish engulfing at pin bar, it is a very strong short setup. Likewise, at L3, a bullish engulfing or a morning star signals reversal upward. These levels work best during the first of the trading day when combined with the price action, and that gives a lot of probable entries. Okay? So, what about the continuation pattern? Right? We know that in trading market, VWAP act as a springboard. So that we have seen it in the previous video. So let's wait for some continuation patterns like flags, pennants, or small pullbacks near VWAP. If the price pulls back to the VWAP and form a bullish candle, it may be gearing up for another leg higher, right? These setups will help you ride the trend instead of catching tops and bottoms. We're going to see some examples also. So entry level confirmation with candle and levels. Okay. So when we talk about the confluence, we talk about multiple probable setups in our favor. Okay, it could be either bullish or bearish. That's how we get the confirmation. So we do not enter the candle. We do not enter the trade just based on the candle alone. We look for some kind of an alignment. For example, is this pattern forming at CPR, or is it rejecting VWAP or bouncing at Camarilla? when price action and key levels line up, your edge multiplies. That's a kind of a confluence we're talking about here. Okay, so confirm your entries with clean candles, strong levels, and volume. Okay, this may look a little complex, and that's one of the reasons that we use the order flow, and we look at the order flow charts, and we look at the weakness, and we can look at the prominent POC, and also we look at the stack imbalances at these levels for reversal or continuation. Okay, let's take a look at the first example where we talked about the trap zones around CPR and VWAP. Okay, now let's take a look at this part. Okay, so market was in a downtrend, and the next day market formed a higher CPR. Okay, so what one would expect the market to be in the upside, right? But what happened? Market went down, right? So let's see that what has happened around this particular CPR level and at the VWAP, right? So the market opened, although we know that this Camarilla pivots and all those, just for the time being, just ignore these, right? And if you look at this, market is open, got rejected, right? And it is trading around this level for quite some time, and it was trying to give a kind of a breakout, right? And what happened? This is exactly happening at the CPR and also at the VWAP level. And then the market is paying, right? So this is one of the trap zones that you have to pay attention to while we are taking a trades. Okay. So this is an example about the trade zones around CPR and VWAP, right? So let's take a look at the next example. So the next example is right here. Okay. Let's take a look at this example for the breakout versus rejection at the pivot levels. And we have seen that the previous day was a narrow CPR. The prices kind of come down all the way, and the following day market opened gap up, right? And market was trying to hit the L3 level, and it was trying to give a breakout above this H3 level, right? And when you see this candle, it got rejected, right? So one would consider this initially before the candle finishes, it is going to be a breakout level, but apparently it got rejected, and then the rejection continued throughout the day, right? So this is one example of how to find out that although this candle is a very good momentum candle, right, it got rejected. So we got to pay attention to those things, when we look at the trend, and along with the pivot points. Okay. So this is example 2, which talks about the breakout versus rejection at the pivot levels. Okay, let's take a look at this example for the inside bar, pin bar, and engulfing pattern. So market had a narrow CPR, right? It has a very good buying candle. It went all the way up to R4. You can see the pin bar, right? And you can see the engulfing bar, right? All you can see is all this engulfing bar, and then it kind of shadowed the entire range, and this is exactly happening at the R4 level, right? R4 level, we know it's a kind of rejection zone, right, in the standard pivot. And by looking at this, we can say that market is struggling at this point, and it is time for the market to reverse. So if you're long at this level, right, and if you're taking a trade, and this is a time for you to to book the profit or trail the profit at this level, right? And this is an example of the inside bar, pin bar, and the engulfing patterns. We are not going to go into details about the every bar type because there are so many things that we can see in the order flow chart that I'll show as an example in the upcoming modules. Okay. Okay. So in this example, we look at some of the reversal patterns at Camarilla H3 and L3 levels. If you look at this, this is an H3 level, right? This forms a good bearish bar, right? And you could see an pin bar, right, at this level, right, which is going to give a short entry. And if you look at this level, it exactly came at the L3 level and formed a bearish engulfing bar, right? So this is the kind of a reversal at the H3 to L3 and then L3 back to H3. Okay, this is an example, right? And if you look at this, this works really fine at the first session of the day, right? And we can see many examples. We will see those examples in the live trading room. But for now, let's understand this concept. Like, this is the kind of a board that setup that we look at when it comes to reversal trades. Okay. And the next example is we are going to look at the continuation pattern near the VWAP. Okay. So market has opened a little bullish. So we know that market is going to be a bullish day today, and it did confirm the good opening, right? Price stayed above this VWAP after 15 minutes. Market trended higher, tested the VWAP, and then it acted as a continuation. So this is another example of the continuation pattern using or near the VWAP. It is important to know these levels, right? And also we will look at some of the examples with the order flow. So now let's take a look at the order flow chart, and where we could understand the weakness, the prominent POC, or the stacked imbalances, what we have discussed in this particular module. So if you look at this, market has opened at this level, just above the VWAP. Market came down, and you can see this long bar, right? Earlier before, the market is showing some kind of a weakness. This weakness means the sellers who are selling it is getting weaker, and then it followed by a good buying candle. You can see this here at this level, which is the max delta. So this gives a kind of additional confirmation, and we take it along with it. And in addition to it, if you look at this particular bar, this is the market exhaustion at the open, and the market is coming and testing at this level exactly, and then it is moving higher, right? So this is how we use the order flow to get additional confirmation. So here is another example on the sell side using order flow, and this market has opened at this level, right? Price went above the VWAP, and we look at this rejection, and then market went down, right? So this is how we use this is a prominent POC, okay? And we use these levels in addition to the pivot levels, the trading wave chart, to spot the exact location where to take a short and where to take a long. So in summary, price action around pivot is your magnifying glass into the market's intention. Okay? Mastering how candle behave near CPR, VWAP, Camarilla, and also standard pivots helps you separate real move from trades. Okay? And in the next model, we will look at the live charts with the examples and case studies, applying everything we have covered in real-time setups. Thank you. And I will see you in the next module. Thank you. Jai Hind.